Hey everybody, it's me, Gregory Mannarino. How are you today on this Friday the 13th, July, Friday the 13th, 2018. People, so, look, well, there's a lot of stuff I want to talk about. Let's start off with this. As I am doing this video blog, stocks are under a little bit of pressure here. Not much as of yet so far today, but a little bit of pressure nonetheless. And this, to me, is kind of interesting. And let me put a perspective on that for you. So today is the real kickoff here for earnings season. We just heard from a few banks. Now, JP Morgan came in better than expected. Citi missed the mark. Morgan Stanley missed the mark. But the entire financial sector right now is under a significant amount of pressure. Now, if you follow this blog, you know this already. The financial sector is the largest sector of them all. Now, the market needs a leader. It's been tech for the longest time, still may be tech. Something is going to have to carry this market higher if it's going to continue in this trajectory here. Now, again, this is huge. The fact that the financial sector is under pressure right now, and two of the world's biggest banks missed the mark, that's a tell. It should be a tell to you as well that, again, that we're being lied to every single freaking day by the mainstream financial channels who did the same exact thing in 2008. I'm not even going to go back to the dot-com bubble. I'm old enough to remember all that. Seriously, but it's the same scenario. I mean, they're blowing sunshine up your crack, telling you everything is just phenomenal. Meanwhile, there's all this other underlying information that is not being talked about. Also, how the Federal Reserve is over here buying mortgage bonds under the table. They're not selling anything. This is why they don't want to reveal their balance sheet, why they're doing everything they can to create distractions, and why this yield curve continues to flatten out. I mean, it's being ignored by these smiling faces, these very nice people, on the mainstream channels. But again, we know the truth. The truth is, none of this is real. This is some crazy thing that's going on here. And the fact that the financial sector is starting out here under pressure, that's a problem. But, look, they're more than likely going to find a way, more than likely, to fake this, to get in here and start propping this up in some way or the other. Now, here's the balancing act that's going on with regard to propping up this market. Now, I've been explaining to you a lot how I believe they were going to at least attempt to keep this propped up through the midterms, and I believe we're going to see a big effort to do that. However, the bond market where it is now, if they get in here and they start buying bonds like, off the Richter scale, like we've seen so many times, forcing a rally here, think about it, pushing a rally in the bond market to push a rally in the stock market, this is unheard of. Generally, cash leaves one asset class, let's say the debt market, and goes into the stock market, or vice versa. Not a rally in both at the same time. Makes no sense. It's engineered. It's fake. So the problem here is the yield curve, and the problem with the yield curve is affecting the banks. Banks make cash if they lend it out with a higher rate, with a yield curve that's flattening out and yields that are dropping, interest rates that are dropping, going completely opposite of what the Federal Reserve said was going to happen, what they were going to make happen. Well, again, what does this tell you? The Fed has lost control. This market here, and this is going to be interesting because tomorrow I'm going to do my look ahead. I have to kind of assimilate all this, and we'll put a perspective on what's going on here. Now, again, as I am doing this video blog, stocks are lower. What am I doing? Again, I closed all my positions yesterday, did really well. Right now, I'm not doing anything. If you were on my website, traderschoice.net, and if you're looking at my watch list that I posted there, a couple of those stocks are doing well. In fact, I almost, and I should have, I'll be honest with you, but I just didn't pull the trigger. I was looking at ticker LOW, ticker triple M. They both are up, and they looked promising, but I want to bet with the trend here. If the whole entire market were going up today, I would pick a couple of spots and go long, maybe buy an index as well. I like to buy indexes. You all know that. SPY, triple Qs, IWM. I never buy DIA. I never buy. Just don't do it. Almost never. And that when I do that, it kind of allows me to watch. See, I got to get in here. I got to get some skin in the game in order to keep me focused enough. It's the truth. And then I will pick a couple of other things and get in on them too. So, the rising tide kind of tends to, raise all the ships. You know what I mean? So this is how you can capitalize on this market as well. But before I go off on a tangent with regard to that, all I'm saying here is the financials now, I would say, are flashing yellow. And we'll see as this progresses. Maybe they'll start to flash red, and maybe this whole thing will start to roll over. Let's watch this, and it's going to be a fun wrap-up. I will see you, my lovely friends, at the end of the day. Bye.